number and 800 to 1,000 crore rupees of capex towards land addition as well. Kamal Singal, who is the MD and CEO of the company, is joining us now to discuss the demand trends and the outlook going forward as well. Mr. Singal, good afternoon. Thank you so much for joining us. Well, quarter three was a strong quarter. How has quarter four been so far? We are towards the end already. Will it be better than quarter three? Will you be able to do sales of around 800 to 900 crores this year itself?
Yeah, quarter three and the numbers up to quarter three have been great. We have seen great amount of traction in everything that we're doing, from fresh sales, bookings, launches, etc., etc. And we are hoping that this momentum will continue into Q4. We don't provide specific guidances on the numbers per se, but we've been growing at a rate of 30 to 40% over previous years every year for the last few years and quarters, and I hope we should be able to maintain this growth rate in the coming quarters and years as well.
All right, and you were targeting what, 1-2 project launches every quarter? Have you done that in the fourth quarter as well?
We should be able to, yeah. Of course, we should be launching one project in Q4, and that track record should be maintained, yes.
So you haven't launched any yet? The last 1 week that we have, we will hear a launch from you, right?
Yes, correct. I mean, there are restrictions on data and everything, so specifics can't be disclosed, but we should be able to maintain our track record of launching at least one project every quarter.
Okay. Mr. Singal, this is about projects. I wanted to understand your land acquisition strategy as well, because that is something that you're planning. You've earmarked around 800 to 1,000 crore rupees for that. Over how many years will you be spending that? Will you do it via geographical expansion? Also, are land prices also seeing a difference? Are they declining or are they rising? What is the trend here?
So on deployment and the magnitude of deployment, as you are aware, we have a 900 crores of platform with HDFC, where 600 crores are coming from HDFC and 300 crores we are investing. Apart from that, as we speak, as of December quarter, we were zero debt company, rather negative debt existed on the books, and hence we have to take it to a reasonable level. So all put together, we are looking at an investment of in excess of 1,000 crores. And that we said in the last September quarter that it should be deployed in 2 to 3 quarters. And we are on track on that, and we should be able to deploy this 1,000 plus crores in next maybe 1 or 2 quarters from here on. So that's one thing. On expansion and where to invest, of course, we are focusing on our existing geographies of Ahmedabad, Gandhinagar, Bangalore, and now we are trying to get a few things going in Pune and MMR market. Beyond that, we are not looking at further geographical horizontal expansion, but we see quite a bit of scope of penetrating deeper into the existing markets itself. And hence we'll continue to focus on these markets in near future. Okay. On prices, yes, land prices have gone up to a certain extent. That reflects the buoyancy in the market overall and the industry overall. But I think volumes and traction and the buoyancy in the demand, etc., all put together, things are fairly good and the momentum continues overall. Okay, so two-part question then. What about the 800 to 1,000 crore land acquisition price kitty that you have? Because land acquisition prices have increased, do you think that will put a spanner in the works of your, expected sort of volume that you wanted to make by acquiring land? That's point number one. And secondly, collections. The third quarter, we saw almost 170 crores of collections. Fourth quarter, is that run rate likely to continue? Yeah, run rate continues. Of course, collections are healthy. We should be able to achieve a very healthy growth over collections last year. We are on track and we are doing fairly good on that and very confident about that. I mean, increase in prices does not necessarily mean that it will have an impact on our overall plan and scheme of things. In fact, we are also going very, very strong on joint development model. Development management model here. Our overall strategy of acquiring project is a mix of 3 things: TM, JDs, and outright purchase. Outright purchase, of course, gets impacted by higher prices. But what we see here is that with every increase in land price, we have been able to pass on a very significant component of cost increase into the market, and hence overall viabilities and volumes, etc., are not getting impacted the way one would have generally taken it as. So we are very confident that we'll be able to achieve the numbers. Volume and value growth will come. And with a combination of JD, JVs and outright purchase, overall it's supposed to be a very healthy mix. And we should be able to show a fairly good growth in numbers.
Okay. So, Mr. Singal, these expansions that you're planning in MMR or Pune, will it be high-ticket projects or will it be mid-housing for now? And also wanted to understand what's the outlook on demand, because we were speaking to some other players. They did say that the hike in rates that we saw from the RBI did impact a certain section as far as the housing segment is concerned. Is that something that will hurt sometime, if not now?
So we are not in any ultra luxury segment. We don't target Mumbai as a market where you look at 30, 40, 50,000 rupees per square foot kind of a product. They're more like a 15 to 20,000 rupee per square foot market. I mean, that's what we will do. We have done this market and this segment in all other markets like Bangalore, even in Pune, we've done very similar kind of market. Ahmedabad also we cater to this, and now of course we do a little bit of a luxury as well, but generally we are focused on mid-priced and higher mid-price, and that's what we will continue to do in MMR as well. So that remains our focus. Maybe if you could repeat the second part of the question, that would be great.
My question was the impact on the mid-housing or the lower housing segment, because we had spoken to other developers. They said not so much for luxury, but there is an impact on that segment. Do you concur with that?
Yeah, lower segment, I would agree that there will be a more direct impact because EMIs hurt that segment more, and when the interest rate goes up, of course, it will have a bigger impact. But when it comes to mid and upper mid market onwards, and especially in luxury, it has a very, very, minuscule or a very small impact there. One, because there is a scope to resize, there is a scope to relocate. You could go a kilometer further down if there is an EMI constraint, etc. Because there is a scope. It's already mid and upper mid segment that we are talking about. For the lower segment, these scopes are very limited, and hence it has more impact. Fortunately, we are operating in a segment which is starting from upper mid onwards in most of our markets, and hence we don't see very significant impact. We did have one project historically, which was ultra low. 20, 30 lakh rupees onwards, and we did see an impact coming on that segment. But as you're aware, we are focused very clearly on mid and upper mid onwards kind of products, and there we don't see significant impact of whatever has been happening in the last few quarters on interest.
All right, final question before we wrap things up, and this one we expect you to answer very quickly. Mr. Singal, what exactly is the current portfolio that you're sitting on? What's the revenue potential from that portfolio? That's point number one. And secondly, with all the expansions that you've announced, what is your future, inventory target?
So we are right now executing around 17 million square feet, and 8 million odd square feet is about to hit the market, various stages of approvals, etc. So all in all, 25 million square feet is our portfolio. A lot of it is horizontal townships and plotting projects, so to say. And with this 1,000+ crore rupee investment which is lined up for the next 1 or 2 quarters, every 1,000 crore gives us, depending upon product category, etc., it gives us 3,000 to 5,000 crore rupees of top line. So that's something that we will be adding in next 2 to 3 quarters also.
So this 25 million square feet has revenue potential of what?
So today we will have a unsold inventory of around 3,000, 3,500 crores. And we should be adding, based on these further investments of 1,000 crores. The normal change could be, the normal data could be every 1,000 crores should give us 3,000 to 5,000 crore rupees of top line, depending on what product you give. Of course, margin will have a sanity, will have some sort of a uniformity, but suppose it's a product like plotting, it gives less of top line and more of bottom line. That way it varies from 3,000 crores to 5,000 crores additionally.
Okay, all right, Mr. Singal, it was a pleasure speaking with you. Thank you so much for joining us. That's the word coming in from Arvind SmartSpaces. With that, we'll slip into a short break now. On the other side, in our special segment, Inside Edge, we put focus on the gas economy. Gail, IGL and MGL will be on our focus. Stay tuned for that.